All right, we're back with our end of day PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. All right, so tomorrow is Take Back Friday. Today is Thursday, April the 20th, 2023. All right, so here's how the markets are shaping up for Friday's trade. So, looking here at this silver chart, you'll notice that we're still in a bull market, but we have a bearish trend momentum reading. As you know, the markets don't move according to the prevailing trend per se. The markets move based off of the trend momentum. Every historical move throughout market history has happened in the direction of the prevailing trend momentum reading and not the major long-term trend. Always remember that. I don't care if you go back to 1929 or go to 1987, the trend momentum reading is where the market activity happened. So, because we're in a bull market, we know the long-term trend is bullish. So what you're waiting for is for this red line to turn green before you get long the market. You do not get long the market when the line is red because that is a seller's market. All right. It means the market is under distribution. Longs are taking profit and getting out of the market. All right. In this situation, we have a red line, which means we have a negative trend momentum reading, a bearish market condition. It means that we have a short-term top in silver. Does it mean that silver will not relock in on the long side and break out to new highs? No, it does not mean that. It just means as of right now, we have topped. This is a 52-week high, and the market has been falling ever since. We're under a selling market, which means you're sell the rally mode right now. Any rally you see in the silver will be sold. All right, until this turns back green, we are sellers of silver. How low can silver go? Well, at least the first stop is the 2250 top of the Kumo cloud. That's our initial downside target. Where's the second target? 21. Where's the third target? 20. That's right, ladies and gentlemen. Below 20, we don't have any support until you get way down here to around 1750 to 18. So it can fall quite a ways. All right. We'll just have to wait and see. We take what the market gives us. Right now, we're selling rallies. And that's it. Case closed. Next up is nat gas. Nat gas is still in a bear market with a bearish trend momentum reading. Therefore, it's in sell the rally mode. And we just came off of a rally mode. The market stopped short of the bottom of the Kumo cloud. And now the market is in the sell the rally mode. I know some of these modes don't last very long. Next up is the Bitcoin futures. Okay. So in our trade journal, which I just finished recording, I briefly spoke about how with the Bitcoin and Ethereum futures, the way the markets are designed, it's generally a good idea to take profits, get out of the Bitcoin futures and Ethereum futures between Thursday and Friday because the futures don't trade over the weekend. The cash market trades on the weekend, but not the future. So something could happen to adversely affect your position and you would be looking stupid when the market opens on Sunday. So it's better just to go and take profit between, Thursday night and Friday afternoon when the market closes. That way, when the market reopens on Sunday, you can reposition yourself accordingly. Now, there is risk in doing that. The one risk is the market could completely fall apart over the weekend. Chances of that happening are slim, but it can happen. Or the market could explode higher and we wake up on Sunday and Bitcoin's at 40,000. All right, those are risks. That's why it's better to get out of the market. It just is. Bitcoin is no joke. So I enjoyed the short from the crash alert. So I'm going to be looking to get out between now and tomorrow afternoon. I'm going to liquidate my Bitcoin futures short just because of the weekend risk. All right. Other futures contracts don't have that problem because they're not derivatives of a market that doesn't close. All right. Cryptos trade 24/7. Futures and stocks don't, and forex don't. So just FYI, if you're operating in this space, you got a bearish trend momentum reading, which means more downside to come. Psychological support is at 25,000. I think that's where the market's going to test. That's the initial downside move target for the move. That's where I want to be able to hold it because of the weekend risk. If this was the S&P or the Dow or even sugar, I would hold my position. But because it's not, and there's weekend risk, and because we live in very troubling times, anything can happen. So I'm going to play it safe. And like I said, I'll be looking to take profit between now and tomorrow afternoon, as should you if you're smart. All right, dollar futures. I'm sorry, I said dollar. Dow futures. We're in a bull market, and we have a bearish trend momentum reading, and we have a crash alert for today. We came into today with a crash alert, got a little bit of downside production, but we have another crash alert for tonight into tomorrow. And I believe 33,000 is going to be our initial downside target. And yes, I believe that we are on our way there, ladies and gentlemen. Just because you're in a bull market doesn't mean the market's bullish. Now, I will change my opinion once the trend momentum reading turns green. When we get the green light, then we'll be in the buy the pullback mode. But right now, because we're still red light, that means stop. That means sell rallies. We're in sell the rally mode. All right, it's just how it is. I didn't make it up. I didn't create it. The market. This is just the dynamics of the market. So you got to understand the markets that you're trading and trade accordingly. And right now, we're looking for the Dow to fall and fall significantly. Next up is the NASDAQ 100, and we have a bull market with a bearish trend momentum reading as well. I'm also expecting this market to follow suit to the downside. We should get between 1250 and 1200. That's the downside initial target. And once again, once this red line turns green again, like back here, then we'll be long. But for right now, it's sell the rally mode. Next up is gold. Gold is also in a bull market, but it has a bearish trend momentum reading. So we are still in sell the rallies in gold. We will not be buyers of gold until the red line turns green again. Then we will be buyers of gold again. But for right now, 1900 is your initial downside target. Like I explained to you in last night's video, I believe that gold has a problem historically with the 1900 price level. So 1900 has always been a psychological resistance, but now that we've taken that out, that 1900 has to now flip to psychological support. If it fails and does not hold, then gold will probably plummet and test the 52-week lows. You don't want to see it close below the Kumo cloud here, below that 1900, or that will be dangerous territory for gold. All right, you won't have support until you get way down here, sub 1650. Okay, it's just what it is, folks. You know, I can only tell you what I see here. So we're sell the rally mode in gold until it isn't, until the market decides it wants to relock in or whatever. Looking at the S&P 500, S&P 500 has crossed over from a bear market to a bull market, but we got a bearish trend momentum reading, and we got back-to-back crash alerts. We came into today with a crash alert, got a little smidgen of downside production, but now we have another crash alert for tonight into tomorrow's trading. 4,000 is the psychological support and our initial downside target. If that does not hold, then the S&P 500 is in trouble and will be gunning for the 52-week lows. And that's all the way down sub 36, going down to maybe 35. All right, that's a warning that I'm giving you. You want to see the 4,000 support hold right here. If it does not, then it's curtains for the S&P 500. All right. Next up is the crude oil, and crude oil is in a bear market, locked in bear markets. In a bear market, so the trend is bearish, and you have a bearish trend momentum reading, that means sell, sell, sell. So oil is in sell, 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 sell the rally mode, and it's been dropping. So you had your back-to-back crash alerts here. You got your initial downside here, followed by another crash alert, followed by more downside production. What more do you need? What more do you want? All right. This market is ready to roll. Now, the support is down here at 75. If 75 does not hold, then it will make a quick run to the 52-week lows. Ladies and gentlemen, this is not a game. All right. The oil is looking bad. Next up is the Russell. The Russell's in a bear market with a bullish trend momentum reading, which means the market is still in the buy the dip mode until it isn't. So as far as selling, there's nothing to sell until this green line turns red. All right. If it does not turn red, then you are still looking for buying opportunities. But here's the thing. I think that the Russell is actually leading the way down. I know it sounds weird, but it's in a bear market and it's been below the Kumo cloud forever. With a bullish trend momentum reading, it still can't get above the Kumo cloud. So I think as this thing begins to slow down, I think eventually this is going to turn red, and then the Russell is going to break fast and hard and drop to not the first 1700 support, but the 1650 support. I think it's going to be gunning for the 52-week lows, folks. And I think things are going to get really nasty in the stock market. I'm telling you, that's just how I see it right now. But for now, the market's going to just continue to float until this turns red. All right. So that's what you're waiting on right now. It's too soon. It's too soon to start shorting the Russell just yet. Got to wait until we flip to red. All right. Right now, you got a green light. When the market's green lit, it means buy. When the market has a red light, that means stop buying, start shorting, or stand aside. Next up, we got the U.S. dollar index. U.S. dollar index is in a bear market with a bullish trend momentum reading. But like the Russell, this activity is happening below the Kumo cloud. So unless this market can stage a bear market rally and get above the Kumo cloud, I'm afraid that once it stops short at 103, the bottom of the Kumo cloud resistance, I think the market will flip back to red. The bear market will reclaim the dollar and it will start to fall. That's what we're looking at right now, ladies and gentlemen. All right. Now, where do I get this from? Because back here, it was green for the longest time, and it could just struggle to get above the Kumo cloud and fell right back down below it. That's a sign of weakness, not strength. But you can't buy it because it's not green, it's red. See what I'm saying? So, yeah, right now, this market is in buy the dip, buy the pullback mode right now until it isn't. So it's not time to short this right now. It's time to either buy it or stand aside. Next up, the Ethereum futures. Same spiel that I gave you about the Bitcoin futures is the same I have for the Ethereum futures. I missed this short because I took the Bitcoin short, but you are in a bull market and you've been getting these crash alerts. You have a red trend momentum reading. So you're in the sell the rallies mode. So I think it's going to come down here to the 1600 support. All right, your support zones between 1650 and 1600. I think that's the downside initial target. But like I said on the Bitcoin futures, if you're trading the futures, it's probably a good idea to get out between now and tomorrow afternoon so that you can cash in your short profits, pop your way through it or whatever. Stand aside and wait till Sunday market open at 6 p.m. Eastern Standard New York time, because anything can happen over the weekend because the crypto market does not close. It trades 24/7, and anything can happen to adversely affect your position, and you could get smoked when the futures reopens on Sunday. So it's just better to just let that happen. All right. And because this is the beginning of a trend, of a move, we don't know how long it's gonna last. The bull market could come back in and reclaim this market this weekend, and this thing could shoot up. Now, if we were way back, here, and we were long from here, and we got up to here, and you got this green bullish trend momentum reading back here, it would have been safe to stay long over the weekend because you're in this locked in mode here. Because you're in the top, you're at a market top from the bear market, the bear market rally, and you're here, your risk is always that the market can relock back in. You dig what I'm saying? So that's what you don't want. Like back here, you had the red trend momentum reading and you had this nice little downward activity, but had you stayed short here, let's say this was Friday, look what happened on Sunday, Monday. You see what I'm saying? So it's better just to step aside and keep your powder dry until the Sunday market open. All right. So that's it, folks. That is our divine setup. So now you know what we're looking at. You see how the markets have done so far for the week. And unless something spectacular happens tomorrow, I think the stock indices are setting themselves up for a major market drop going into next week. So we'll see how things work tomorrow. You never know. It's Take Back Friday, so the market could have a little bit of a rally, but not too big of a rally. But if it doesn't, if the market's going to try to buck the trend and give us a flip from a red bearish trend momentum reading to a green bullish trend momentum reading, tomorrow's the day to do that. All right. So if it does rally tomorrow, it has to rally enough to change the momentum, to shift the momentum. If it does not do that tomorrow, ladies and gentlemen, I'm afraid then when the markets open on Sunday, next week could get absolutely bloody. All right. So I just want to set the tone and the expectation and let you know what I'm seeing and what the market's working with so far. All things being equal, if right now was Friday night, it's not looking so good going into next week. So yeah, man, I know. What can you do? I can only tell you the truth and tell you what I see the market's doing and show you where we are and perhaps where the market may be heading. But it's all, up to the momentum part of the market. With that being said, remember the system works if you work the system. So make money, not excuses. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And with that being said, have a wonderful weekend. And I'm out. Peace.